Strong internal controls are the backbone of a successful small business, and their value can be traced through the entire history of accounting. Since the earliest record-keeping systems in ancient civilizations, accounting has always served one purpose: to protect assets and ensure accurate financial information. Over time, the tools and methods have changed, but the goal has stayed the same. Today, with digital platforms, automation, and AI reshaping how businesses manage their finances, internal controls are more important than ever. Many small business owners assume these systems are only for large corporations, yet every business, no matter the size, depends on reliable processes to prevent fraud, avoid errors, and maintain transparency. When controls are in place, your company becomes stronger, more trustworthy, and better equipped to grow. In this article, we'll walk through the evolution of accounting, from its roots in ancient economies to the highly automated systems used today, and show how internal controls have remained central to financial stability throughout every era. Early origins of accounting. The roots of accounting stretch back thousands of years, long before modern businesses existed. Early civilizations such as Mesopotamia, Egypt, and Greece relied on simple record-keeping to track trade, manage inventories, and document taxes. Clay tablets, papyrus sheets, and handwritten ledgers served as the earliest accounting tools. These early systems focused on basic bookkeeping, but they played a critical role in helping societies manage growing trade networks and more complex economies. By keeping accurate records, merchants and governments could maintain order, prevent disputes, and support economic development. These foundations eventually grew into the structured financial systems we use today. The development of double-entry bookkeeping. The Renaissance sparked one of the biggest breakthroughs in accounting history. In the 15th century, Luca Pacioli introduced the double-entry bookkeeping system in Italy. His method recorded every transaction in two places, one as a debit and the other as a credit, ensuring that financial records always stayed balanced. Double-entry bookkeeping changed everything. It allowed merchants to keep accurate books, spot errors quickly, and prepare financial statements that reflected their business performance. It also made it possible to track complex operations that went beyond simple buying and selling. This system became the backbone of modern accounting and remains the standard used across the world today. The Industrial Revolution in modern accounting. The Industrial Revolution brought large factories, more employees, and longer supply chains. With businesses growing rapidly, the need for more advanced accounting methods became clear. Cost accounting emerged as firms tried to understand production expenses, manage budgets, and measure profitability. Financial reporting also became more structured as investors and lenders demanded clearer information. Accountants took on more analytical and advisory roles, helping businesses make decisions instead of just maintaining ledgers. This shift marked the start of accounting as a strategic part of business operations. The digital age and accounting technology. The rise of computers in the 20th century transformed accounting again. Manual ledgers gave way to spreadsheets, software, and eventually cloud-based platforms. These tools made it easier to automate repetitive tasks, reduce errors, and generate financial reports quickly. Today's accounting technology includes cloud platforms like QuickBooks, Xero, and FreshBooks, AI tools that support forecasting, reporting, and audits, automated systems for payroll, invoicing, and tax compliance. These innovations give accountants more time to focus on analysis, planning, and advising clients. Technology continues to push the profession forward, improving accuracy while expanding what accountants can do. The evolution of accounting has come a long way. What started as simple record-keeping has grown into a field that blends financial management, business strategy, and advanced technology. Early systems kept trade and taxes organized. Double-entry bookkeeping brought structure and accuracy. The Industrial Revolution expanded the accountant's role. The digital age introduced tools that made the job faster and more precise. Despite all these changes, the goal has stayed the same: to provide reliable financial information that helps people and businesses make smart decisions. If this video helped you understand accounting a little better, don't forget to like, share,